In 2007, business tycoon and legendary investor Warren Buffett staked a $1 million bet that over 10 years an index fund would outperform a portfolio of stocks chosen by hedge funds. Come 2017, and Buffett proved he had as much sense as money when he scored that sweet mill and opened everyone's eyes to the earning power of index funds. If you're new to investing and want to learn more about what they are, in this video I'll take you through the basics, why they might be a good investment for you, and how to invest in them. Simply put, an index fund is a portfolio of stocks, shares, and financial assets that tracks a stock market index. They're a popular choice among investors as they allow you to invest in a bunch of things at once. There are loads of stock market indices to choose from, but the most well-known in the UK is the Financial Times Stock Exchange 100 Index, otherwise known as the FTSE 100, which tracks the 100 biggest companies on the London Stock Exchange. With fully managed investments, your fund manager will take care of all the buying and selling, including predicting potential price movements to earn you a profit. This is known as active management. Index funds, however, are considered to be a passive investment strategy and work a little differently. They're set up to mimic the movements of a financial index and therefore don't need such hands-on management, usually saving you money in maintenance fees. With lower fees and broader investment opportunities, index funds are typically considered a lower cost, lower risk investment. Another low-cost fund you may have come across are exchange-traded funds, or ETFs. While they're similar to index funds in that they allow you to invest in groups of stocks and shares, there are a few key differences. The price of an ETF is fixed at the time of sale, whereas the value of an index fund isn't calculated until the end of a trading day. You don't usually pay commission for index funds while you would with ETFs, and ETFs are actually listed on the stock exchange and can be traded like stocks and shares, whereas index funds can be considered more like an investment approach than a product itself. The idea of being the first to invest in that one superstar company is naturally very appealing, but there are loads of benefits to lobbing your investment eggs into a couple of baskets. Index funds tend to perform well when compared with other stocks, especially if you can invest over a long period of time. There are loads of funds to choose from, including lists of ready-made portfolios built by experts, which can be a great benchmark if you're just starting out. Because they don't require as much hands-on management, index funds could save you time, money, and the effort it would take to buy and sell individual shares. And index funds are a great way to quickly build a diverse investment portfolio. Of course, investing in index funds isn't a surefire way to reach Warren Buffett levels of wealth and exceptional red tie game. Seriously, the guy loves a red tie. Google it. Buffett placed his bet over a 10-year period for good reason, as typically index funds aren't considered a great short-term investment. Even though they're billed as a safer investment, some index funds still track riskier stocks. So do your research and remember that no matter how you dip your toe into the stock market, there are risks involved. To invest in index funds, you simply need to find a broker or online trading platform that sells them and choose a fund to invest in. These days, there are tons of options out there, so visit finder.com to compare and find out which provider is best for you. Links are tagged in the description below. Before you pick a provider, it's worth considering two main points. What's your strategy? How long are you planning to invest for, and how much risk are you willing to take on? And have you done your research? Take some time to research the provider. Do they suit your level of expertise or investment goals? And consider any fees they might charge. Once you've chosen a provider, simply sign up. You'll need to provide a few personal details and proof of ID. Ensure there are enough funds in your account, find the index you want, and place a buy order. What are your thoughts on investing in index funds? Do you think this theoretically low-cost, low-risk strategy could be in your investment future? Let us know what you think in the comments below. And for more information on index funds and investing, head to finder.com. Links are tagged in the description below. If you enjoyed this video, give us a like or subscribe to our channel. And as always, thanks for watching.